Hi, this is cash flow number 5, Sandeep PLC, and these are my two books. So if you want to purchase, just send me a message through WhatsApp so I can deliver to your home door. First adjustment given 60% of sales and 80% of purchases were made on credit basis. So which means the other portion, the remaining portion were made on cash basis, all right? So the total sales given in the income statement 24,000. From that 40% were done by done on based on cash, so which means 9,600 you have to record in operating activities, and the remaining 60% you made on credit, right? And the debtors closing balance it's given 7,700 in SOFP, so which means the total sales were done on credit basis 14,400. From that closing debtor balance, so still receivable 1,700, so which means within the year the company received altogether 12,700 from debtors, cash inflow in operating activities. And when it comes to the purchases, first of all, you have to find out purchases because in the income statement it's given cost of sales. So purchases is included in cost of sales. So cost of sales 7,750 and your closing stock in the SOFP 1,250, which means your total purchases 9,000. From the total purchases 9,000, 20% were made on cash. So 1,800 straightly in operating activities cash outflow. And the remaining 7,200 is what you made on credit. From that, 940 still payable as a closing date. So which means we already paid altogether paid 6,264 creditors. So that in operating activities cash outflow. Other income represent the rent income. So all other income represent rent income. Rent income in the income statement given 750. From that rent income receivables 325. So which means rent income received in cash 425 in investing activities. Other expenses include land revaluation loss 800 and the other part is employee compensation. So your total other expenses in the income statement 1,850. From that 800 is land revaluation loss. So this 800 land revaluation loss is not a cash flow. So the other part employee compensation 1,050 cash outflow operating activities. And the other case is the land carrying amount at SOFP as at closing date 9,900, which made after the revaluation loss 800. So which means as at opening date, you purchased this land for 10,700. So that you have to record in operating activities. And yes, and these are the other non-current assets. So buildings, motor vehicle, these cost purchases you have to record in investing activities, and these are the depreciations. So building depreciation you have to consider under administration expenses, and the motor vehicle depreciation you have to consider under distribution expenses because these depreciations so not a cash flow. So you have to get the administration expenses paid and the distribution expenses paid without these depreciations. And when it comes to the administration expenses, there is other information in the SOFP. It says 345 still payable as a closing date. So from that, you can find out you paid in cash for administration expenses 2,835. Your total administration expenses for the year 3,800. From that, you have to subtract depreciation 620. It's non-cash flow and still payable as a closing date 345. So the cash amount that you paid for administration expenses 2,835. And when it comes to the distribution expenses, as a closing date is given, you paid an extra for next year as well. So which means distribution prepayment 285. And there's a motor vehicle depreciation 750. So the total distribution expenses for the year 2,150 from the income statement, and you paid an extra for the next year 285. So both together you have to add, then you have to minus this motor vehicle depreciation 750 and to find out what is the amount that you actually paid for the distribution expenses in cash, right? And yes, that's it for that. Finance expenses includes 50,000 bank charges, rest is bank loan interest. Your finance expense in the income statement 500. From the bank charges 50 operating expenses. And the interest expense for the year is 450. And the SOFP is given as a closing date. There is still payable 120 for interest expense. So which means the total amount is 450. From that, still payable 120. So which means you paid for the interest expense in cash 330 and pay dividends within the year. So you are paying dividends through retained earnings, and the profit after tax that you generated in this year, you are transferring to the retained earnings. So in the income statement, profit is 7,250. From that closing date retained earnings balance given 6,325. So the cost of the reason of the difference, the profit and the closing balance, is what the paid retain dividends. So that paid dividends is 925. So that you are recording uh, financing activities. And this same question that you can make through as in indirect method, right? So the profit before tax in the income statement 8,700, and you have to add PP depreciation 1,370, because PP depreciation and also the PP revaluation loss both are non-cash transaction, but both are expenses. So which means it's already deducted when you're finding the profit before tax. So to reverse that transaction, you have to add back PP depreciation, PP revaluation loss. And when it comes to the interest expense, there is a specific space to subtract the interest paid in cash, right? So you have to add here the total interest expense and then subtract the interest expense actually paid in cash at the bottom in the operating activities. And the rent income, the total rent income already included when you're finding the profit before tax, but the rent income is not relevant for the operating activities, right? So the total rent income you have to add, sorry, you have to subtract from here, and then you have to minus you have to find out the rent income received in cash, and then you have to record in investing activities. And the working capital changes. So these all current assets and current liabilities are increased because there is no any opening balance. And when the current assets are increased, we consider that as cash outflow. And when current liabilities increase, we consider that as cash inflow. And that's how you are presenting this as in indirect method. Uh, so here I only mention the operating activities in the indirect method, because financing and investing, there is no any difference between indirect and direct, right? So that's it for this question, and this is bit easy question, and we will meet from the next questions as well. Thank you, and stay in connect. Please share with your friends, and do comment the compliments or the bad things or anything. Okay, so Jai Veera.